Hello traders and welcome to another weekly market forecast video. Hopefully you are having a great weekend and ready for the next week of trading. So in terms of the market, starting with the dollar index as we usually do, as we said last week, we expected a choppy market to take place, but we are expecting from the next week to ideally get a reaction lower before another move higher in the dollar index. This is the outlook that we have for the moment. So let's see what this week is going to do. But overall, as we explained from the last week, the market in the Forex market at least is not providing with any solid moves for this point onwards, because this is the move that we expected to happen in the dollar index, as we were saying over the last 2 weeks. We have got that, and now things will be getting sideways and choppy before the next move. But this is the outlook that we have, more sideways dollar for the next coming week or so. For the dollar yen, we have reached a Fibonacci extension area right here, and we are expecting the market from here to give us a reaction at least before the next reaction higher. So this will be the outlook for the dollar yen. Ideally, one more drop before the next reaction higher should be taking place in the dollar yen. And as we have seen here, the RSI breaks to the downside from this channel, so the highest probability move should be one dip to the downside first. For the euro dollar, we can expect to see some corrective bounce to the upside first before another move to the downside. And this also it's another sideways and choppy price action that we are expecting from the euro dollar without any directional trend move yet. So firstly, some correction to the upside is more likely, but soon enough afterwards we can expect to see some reaction to the downside next. So this will be the outlook for the euro dollar for the upcoming week or two ahead. For the pound dollar, similar to the euro dollar, we should see some bounce to the upside before the next move lower. So this will be the outlook as well for the pound dollar right here, where there is no momentum from buyers at the moment. So if any correction, this will be for another move to the downside, and the market is not able to trade to the upside more. As for those of you who have been following us for a long time, you know that we have been expecting this move and this move and this move to the upside in the pound. So now we have reached at the major Fibonacci extension area, whereby the market is expected to spend a little bit more time within this area before the next decisive move can take place. So this will be the outlook for the pound for the next week or two ahead. For the pound yen, we can expect to get a reaction lower before the next move to the upside can take place. The target to the upside remains 197-200 area, as we have expected from these lows right here, where we projected this move to the upside. Then we have made a pullback, and now we are trading sideways to higher before the next move to reach this area. So this will be the outlook for the time being for the pound yen. For the EURUSD, we are still within this corrective bounce to the upside, which soon enough will lead to more downside later on, but still we might see another push to the upside first before the move to the downside. So the market can get choppy in the coming week in the EURUSD, but don't forget the bigger picture is still lower. So if we see a bounce to the upside, we should expect from the sellers to bring the market down to the downside later on. Now for gold we have got a clear 3-swing pullback into a Fibonacci extension area, which buyers were able to defend for the next move to the upside. So this is a classic buying the dip opportunity for the aggressive traders. For our members, those who have bought from this area, they are already risk-free. So looking to take profits if the market makes an all-time high towards the 2700 to 737 area. Otherwise, there is still a chance for the market to fail and do a double correction lower before it goes higher. That's another possibility, but either of the case, buyers are still in control in gold since a couple of months down the line. So we are expecting this dynamic to continue, whether we make new all-time highs now and then react, or whether we might do the double and then buyers buy the dip again lower. So the outlook for gold remains bullish, and at the moment there is no trade set up because the market is in the middle of an ongoing structure at the moment. And this is why it's important that you learn how to trade correctly and do not jump into the market at random times and random prices, because at the end of the day this will give you random results. So if you want to trade correctly and the right instruments, you can join us with the link in the description. Ideally, the premium plan is for someone that looks to get most of value. We will help you understand the market and when is good time for trading and when is good time to stay away from certain markets. And we will explain to you why as well, and how to understand probabilities, risk to reward, and everything that you need to know as an investor or as a trader. So for gold, nothing interesting. Still the market is trading higher, but for trading, if you didn't buy the dip from this Fibonacci extension area, there is no trade set up at the moment. For oil, this is the Fibonacci extension area that we have explained that sellers should have reacted the market to the downside. They have done that during the last week. And now from here, ideally, the market should start trending to the downside to follow up with the bearish trend that oil has been trading in the last 2 years. So we can see from here more downside in oil. Alternatively, if it doesn't happen from here, the market will react and then might make another move to the upside like that towards the 80 area, and from there things can start shifting once again. But for now, we are going with the most probable and aggressive view, which is from here to start the next move to the downside, which ideally should break below the 65 area going down to the 60s. And this is our view that we had in oil since months before. So also for this one, if you want to see the bigger picture, again, we show this to our members in the member area. You can join us through BMC page. The link is in the description. And this way you will know which areas are the major areas and timings for buyers and sellers when we have this data, and we explain to you as well during the live sessions how we see the market, so you can always stay on track and updated with the right information and not the wrong information. And most importantly, understand why trading is a game of probabilities and timing, and it has nothing to do with what you see in the main media or what you see across fake influencers and traders across the internet. So for oil, as we said before, from this area, most aggressive view is to the downside, and let's see what happens next. The SPX S&P 500 cash index, we are heading to new all-time highs as we have got this week as expected. So the market continues its path to around the 6,000 area, which eventually should be reaching. So short term, whether we will see a short term dip is going to be for buying. So we are expecting more upside to the 6,000 area overall. We have been saying this months ago that this was an amazing buying the dip opportunity at the beginning of August for those who like to benefit from these value trades in indices. Thereafter, we have got another pullback here, which was another aggressive opportunity for buyers, and now we have got the new all-time highs. So from here, as I said before, we should go to our targets, which is the 6,000 area up here to be reached before the next reaction. So how we are going to go there? Short term, the market can give always different variations. You might get a pullback, you might do something like that, or you might also just straight up do very small pullbacks and continue higher to hit the target before another reaction can take place. So still bullish in the bigger picture for the SPX and the indices. A quick update for Bitcoin. As we have been explaining, the months of September and October, it's an accumulation stage, which we are trading between 65,000 and 58,000 area. So soon the market from here is going to break to the upside for new all-time highs. So we might still get some choppiness around the week or so before we start heading higher in the next 2 weeks potentially. So the outlook for Bitcoin is bullish for new all-time highs. That should be more noticeable sometime within the next 2 to 3 weeks time. And concluding our weekly market forecast video with our two ETFs, the 3Qs and GDX. For the 3Qs, we are expecting new all-time highs to happen soon. So we are trying to trade to the upside at the moment. So an alternative scenario to this move, it might be a possible pullback before the next move higher. So it's going to be a sideways to higher market for the new all-time highs for the 3Qs ETF. And for the gold miners GDX, we have reacted to the upside after a pullback. So we are expecting a little bit more upside, but another reaction lower to happen first before the market finds another support for a bigger move to the upside. And the secondary target, it should be the 45 area when we are ready within this accumulation stage to go higher. So that's what we have for this weekend's market updates. So if you have any questions, you can leave us a comment or send an email to ROI forecast support at roiforecast.com. For those of you who have any questions about our services and membership, you can find the link in the description. We will be happy to help you out with the right education in terms of how to analyze the markets and how to trade, and most importantly, when not to trade, because everyone is focused on clicking the buy or the sell button, but little do they know that they are taking most of the time the wrong trades at the wrong time. So this is what we are here for to do, to help you correct those mistakes. And we are pretty much sure that you will find great amounts of value from our service. So feel free to check it out, and we will see you in the next video, probably this midweek, with a different video, either educational, or we might share with you some of our successful long-term forecasts we have been seeing since months ago, so you can get an idea of how we look at the markets in the long run and how we track these type of swings. So our members, they are always informed ahead of time what to be expecting next. So enjoy the rest of your weekend, and we'll see you in the next video. Take care.